What's up, everyone? Rose Brown, the accountant therapist here, and welcome to another week of Tax Tip Tuesday. So, today we're talking about something quite interesting, which I believe impacts a lot more people than we would want or think that it actually impacts. And that is the tax impact of being self employed, right? So, a lot of people here in America, a lot of us are self-employed, right? Whether we have a small activity or a large activity going on, it's still self-employed. And there's a lot of tax impacts that come with that. So that's really what we're talking about today. So, with that being said, I am the CEO of Brown's Advisor and Accounting Firm, where we provide an array of accounting services, including taxation, right, for individuals and businesses. You can find us on social media. You can send us an email at info@brownsaaf.com. You can visit us on our website at www.brownsfca.com. And just before I jump into today's topic, which I've mentioned is the tax impact of being self-employed. Last week I talked about the impact, understanding your filing status. And with regards to your filing status, it's important that you understand how it works, how it flows, and how it impacts you from a tax perspective. So if you've not yet seen that video, definitely go ahead and check it out and ensure that you are choosing or utilizing the right tax filing status. Okay, so as we talk tonight, it's really going to be fun for me, and I hope informational for you, right? So the first thing that I want to kind of get to is, what does it mean to be self-employed, right? So a lot of people, you may hear it, you may not understand it. So let's break it all the way down. What does it mean to be self-employed? And that looks like you're working for yourself. You're working independently, and you're generally not considered an employee, right? And in being in that particular umbrella, you could be considered a freelancer. You could be considered a gig economy worker, right? And you can even be a Uber driver, a Lyft driver, or you just have your side hustle, whatever that looks like. But essentially, you're providing active labor by yourself outside of someone that you're reporting to directly as an employer, right? And that also means that you're in charge, right? You make the shots, you call the shots, whatever you want to say. But essentially, you're in business by yourself, right? And you're seeking to make a profit. And in doing so, you add a level of flexibility to your schedule, to your operation. Some people may say, hey, I just kind of work on my own time. I do what I want to do, kind of when I want to do it for the most part. That's essentially what we're looking at when we say, what does it look like to be self-employed? Now, we just talked about the surface level of being self-employed. Now, what does it really look like to be self-employed, right? That looks like responsibilities and obligations. And I have to put certain things in perspective for folks to understand what I mean by when I say responsibility and obligation. So when you're an employee, right, you're working for someone, they are overseeing everything. You clock in, you clock out, they pay you, they take out the taxes, they pay to the government, you're good, right? When you are self-employed, you're literally in charge of everything. You are calling the shots. What that means is there's nobody hovering over you and saying, hey, I'm going to take out your taxes right now and I'm going to pay to the government. No, you're literally in charge of all of that. So you have to understand when, where, and how to make sure that you're paid, to make sure that you're paying the right governmental agencies, right? So a lot of things are coming into play when we talk about responsibility and obligation, right? You're in charge of making sure that all your expenses you're keeping track of, all your income. So everything, literally, the ball is in your court. Yes, it's great to have that flexible umbrella of being able to kind of move when you want to move, but also when we start looking at that responsibility and obligation, it's like, ooh, do I really want to go there? Now, being self-employed can be a marvelous thing. However, you have to understand those responsibilities and obligation that come with it. Again, as I mentioned, you're in charge of absolutely everything, right? So that means when it's time to report your income taxes, you're the one that's in charge of doing that. In terms of making estimated tax payments, you're in charge of doing that. Remember, I mentioned before, when you're an employee, someone's doing it for you. But when you are self-employed, you're then required to make quarterly estimated tax payments. And what that looks like is, for example, if in the prior year you owe more than $1,000, you are required to make estimated tax payments. However, if you anticipate that you will owe more than $1,000 or essentially owe more than you did in the prior year, then you find yourself needing to make that estimated tax payments. Now, these things are done on a quarterly basis. And if you don't do it on a quarterly basis, the penalty and interest can be pretty stiff, right? The interest of the IRS right now, I believe it's about 7%. So it's something you really don't want to play with. Okay. Now, in making those payments, you would generally go on the IRS's website and make those electronically. Well, that is a recommended way to do it. You still have folks who, fill out the worksheet and mail in their stuff, but essentially you want to do it electronically so that you can have records of that and ensure that the transaction is completed. Okay. Now, a question might be, how are my self-employed income taxed? All right. It's taxed two ways. You have income taxes and self-employment taxes. Now, income taxes, that's assessed to everyone across the board. So every individual who has any type of income is generally assessed income taxes. All right. Now, when you're self-employed, you have what is called self-employment taxes. And your self-employment taxes, what makes that up is FICA. And another way to elaborate on FICA is Social Security and Medicare taxes, right? So when you are self-employed, you are in a situation where you have to pay these. And this is generally 15.3% of your net profit. Not if you have a loss. If you have a loss, then you don't have to worry about taxes that needs to be paid on that front. But generally, as a self-employed individual with net income, with a net profit, you will find yourself needing to pay generally, again, that 15.3%. Now, typically, income as a self-employed individual is reflected on, let's say, a 1099 NEC. So that's non-employee compensation, right? Or a 1099K, where you have provided service or sold goods through a third-party provider. That could mean you're selling through Shopify, you're selling through PayPal, those sorts of places, right? Now, even if you don't receive a 1099 NEC or 1099K, you're still obligated to report the income that you have received from providing your services to someone else or selling a product, right? So when you think about self-employed income being taxed, it's generally income you have received for providing active labor. So that's earned income. You've actually provided services to earn that income, okay? Now, another question may be, well, how do I report my self-employed income on my tax return? And this is a very important thing to know, because a lot of people, especially if it's your first time being self-employed, it might be a little bit confusing, right? You may say, wait, can I just file my 1040 and then just go file my business activities later on? No, it doesn't work like that. Generally, the way you report your self-employed activities really depend on how the business itself is taxed, right? So let me give you an example. If you are a single member LLC or you're a sole proprietor, right? Your self-employed activities are reflected on what is called a Schedule C. Now, that Schedule C can never be filed by itself. It has to be reflected on your personal income tax return, right? So when you're filing your personal tax return, those self-employed activities has to be present on your personal income tax return. So you just want to make sure that you never find yourself, hey, I'm going to file this now and then file this part later. I've had that happen in the past where a new client comes and you're like, hey, you know what? I already filed my personal return, but I need to file my business activities. Well, what kind of entity do you have? The person says, hey, I have a single member LLC. Oh, wow. Okay. Now, based on the information provided, you will need to amend your tax return, because we can never send the Schedule C by itself to the IRS or to the state. It all has to be reported on that same tax return. Now, as I mentioned, it depends on the entity. If, for example, you have a multi-member LLC or you are a partnership, then things will look a little bit different, right? Because that self-employed activity first gets reported on the business return, which is a partnership, right? And once that partnership is filed, that partnership return is filed, it produces what is referred to as a Schedule K-1. Now, that Schedule K-1 is what ultimately gets reflected on your personal income tax return. So at the end of the day, what you really want to keep in mind is, if I am self-employed, I can never file my personal tax return without my business activities unless my business activities are reported on a C corporation tax return. Okay, so any other entity is a flow through entity and it has to hit your personal income tax return in order for you to be considered in compliant or having a completed file tax return. Okay, now as we kind of come down to the end of this video here, one major question that I get from a lot of self-employed individuals is, well, how can I save on taxes? Now, this is a very broad question. And it takes a whole lot of different things into consideration to determine how can you save on taxes, right? But I'm going to give you two main items that really shift you in that place of being able to save on taxes, right? And that first one is invest in tax planning. This here is one that a lot of people, they really want it. They want to do tax planning, but guess what? Tax planning takes a lot of work. So you can't expect to pay pennies for tax planning. So ultimately, it's going to be a bit of an investment, right? It's going to seem expensive at first glance, but over time, it's going to be well worth it. A lot of times when you invest in tax planning, you end up saving, 2 or 3 times what you ultimately invested in that tax planning. So you want to make sure that you truly consider it and ensure that the person that you're working with is one that you trust and understand essentially what is taking place, right? And then the second major piece to helping you save on taxes is bookkeeping. Right. So a lot of people, they overlook the simplicity that bookkeeping helps them to bring to their tax return. All right. In order for you to have a correct tax return, you need to ensure that your bookkeeping system is in play, because if your bookkeeping system is out of whack, right, things are all over the place, you have personal mixing with business, then your tax return is going to reflect that. And that is incorrect, which means if you were to be audited, you could find yourself in a lot of trouble. Right? So when it comes down to bookkeeping, consider this. Every expense count. Every one of them count, because at the end of the day, if you don't count your expense and you lose it, you ultimately pay taxes twice. What I mean by that is the money you use on that expense, you've already paid taxes on it. Now, when you remove that expense, you're now paying taxes on a second set of income. So you want to make sure that every expense that you incur as you are self-employed, again, you could be driving Uber or Lyft, that fuel, you want to keep track of that. If you just have a little side hustle and you're providing services from your home or wherever it is, every expense. So think about it like this. Any expense that I incur for my business, I want to make sure I keep track of it. Right? Because ultimately, any expense that is ordinary and necessary for the purposes of you operating your business, whether that's to enhance it or stabilize it, it's a business expense. Keep track of everything. And as I say, keep track of everything, you want to make sure that you document everything, because ultimately, whatever you cannot substantiate, you cannot place it on the tax return, right? You have to be able to prove that this thing actually happened. And if you're not able to, you count it as a loss pretty much. Okay. And then the last piece to this bookkeeping system here, and I oftentimes have to break this down to a lot of different people. When it comes down to bookkeeping, there's 2 things that you want to keep in mind. You want to keep in mind time and money. When I say time, I'm referring to the fact that you have time. You are able to sit down at least 2 to 3 hours a month, let's say minimum, and take your time and go through all the different things that are happening within your business, making sure that you're keeping track of everything and things of that sort, right? Now, if you have the time, this is considered DIY, do it yourself, right? You can use a spreadsheet. You can customize the spreadsheet to where it's comfortable for you, to where you won't be confused and it just works, right? Or you can decide, you know what, I'm going to do it myself using an accounting software. If you're using an accounting software, make sure that you are comfortable with the software and you're familiar with it. Don't try to just do it on your own without the experience that's necessary to ensure that whatever you've done at the end of the year is correct. Okay. And then the next piece to this is, if you don't have the time, which is where a lot of people find themselves, but they have the funds, right? Now you need to invest in that area so that you can get back your time to go invest it elsewhere in your business. And when you outsource it, which is the money, right? You're hiring someone to do the work that you don't have the time to do. That's going to be either a bookkeeper or an accountant, someone who's able to just go ahead and ensure that your books are accurate, it's kept, and everything is in order, right? So again, a few other things to just kind of keep in mind is if you are self-employed and you are working with independent contractors, meaning you hire someone for professional services, maybe you hired a virtual assistant, right? These types of things you want to make sure that you are keeping track of, because if you are working with an independent contractor, someone who provides you with professional services, you need to ensure that you're issuing them a 1099 NEC, right? Ultimately, if you do not issue them a 1099 NEC, you're going to find yourself in a situation where you end up paying the taxes for them because you didn't issue it to them, right? Because at the end of the day, it works like this. With the IRS, it's a system of checks and balance. So you as a self-employed individual, you hire someone to do office duties. You've paid them over $600. When you issue them that 1099, the IRS gets a copy, and now it's on the books of the IRS. The IRS is then waiting for the person whom you hired to report it on their tax return so that they can balance it out. If you never report it, the IRS doesn't know about it, but this person said, you know what, I didn't get a 1099, I'm not going to report it. Now you pay this person under the table, off the books, if you prefer. And then when you do something like that, you find yourself paying the taxes for them. And you never want to find yourself in a situation where you're paying taxes for someone that you've already paid compensation to, right? So if you're working with anyone who is an independent contractor, you want to make sure that you're issuing them a 1099 at the end of the year, okay? Now, one other thing that you want to consider is ensure that you're working with the right tax professional. Not all tax professionals are created equal. You do have folks who are just tax preparers. You have folks who are tax advisors. You have folks who are accountants who do not do taxes, but they may do tax planning. You do have bookkeepers who do taxes, or you have tax professionals or tax preparers who don't do bookkeeping. So you want to make sure that you understand the service that you are getting based on who you're going to, and also assessing your needs. What is it that you need? And as a self-employed individual, you don't need a regular tax preparer. You need someone who is equipped enough to guide you, advise you, and direct you so that you can maximize your tax deduction. Okay. And if you are working out of your home, this is a big one that a lot of people miss. Ensure that you take advantage of the home office deduction. It's pretty cool. It could be a couple of $1,000s depending on how large that home office is. And what I'll do is I'll do a video at a later time breaking down how the home office deduction works. But ultimately, if you are self-employed working out of your home, it is something that you can absolutely take advantage of. Make sure that you bring it to the attention of your tax professional. And then the last thing here is if you are married, filing joint, you are filing a joint income tax return with your spouse. Keep in mind your spouse's activities and your activities all showing up on the same tax return. That could throw you over in the next tax bracket. And that's why you need the right tax professional, but you also need that tax planning, right? And typically whenever you are married, filing joint and you have a business, let's say, a husband and a wife have a business together, they can treat it as a qualified joint venture where they don't have to consider it as a partnership, but just reflect it on their own personal income tax return. Because once you step into that partnership realm, things start to look a lot different. Okay. So ultimately, as we end this video here, I just want to reiterate a couple of things. If you are self-employed, ensure that you have, the right system in place to keep track of your expenses, the right professional in place. Do you need an accountant? Do you need a tax advisor? Who do you need on your team in order for you to maximize your tax savings, right? And then do you have a bookkeeping system in place? What system are you using to maintain your records, to keep track of everything that happens in your business? Because ultimately, everything that takes place, you have to be able to substantiate it, right? And at the center of all of that, when you're self-employed, you have self-employment taxes, and that could be very brutal for a lot of people, especially if it's your first time or second time, or maybe this is the first time you're having a profit in your business. That liability can be painful. I mean, I've seen clients literally cry before me, in front of me, because they've never seen a liability that big before. And that's because they didn't plan for it. They were unaware of it. So you want to make sure that you go ahead and just do your due diligence. It's okay that it's going to cost a little bit more upfront, but ensure that you get the right people and the right things in place so that you don't have to look over your shoulder. Who wants to look over their shoulder to see if the IRS is coming? I'm sure you don't want to, right? So that concludes it for today. It was such a pleasure going through this video, talking about this topic here. If you have any questions, you can always reach me again at info@brownsaaf.com. You can schedule an initial free consultation through our website at brownsfca.com. And we can just kind of talk about your situation and what you have going on. With that being said, I will see you all next week for another Tax Tip Tuesday live video.